Welcome to my channel. This week we are going to discuss about the broader market returns, how it is behaving, the leading sectors, the lagging sectors, and why the Friday's fall is not a concern and how structurally sound we are. So this is going to be a shorter video. So let's try to look into the contents. So moving ahead with Nifty total market, this week we saw returns of 0.1%, which is pretty much nominal, not that great. And we had two good days and one pretty much odd day, that's on Friday, and which has wiped out the returns for the entire week. That is majorly owing to the rebalancing of the indices, which we call it as MSCI rebalancing, which happens 4 times in a year. And we'll look into this part later in the end part of the video. So prior to that, let's move ahead with the actual analysis of Nifty total market here. So you can see the charts for Nifty total market, and this week it has been pretty much weak, and we are still around the 50 days moving average pretty much smoothly, and also we are coming around the regions of 200 days moving average, which is pretty much stronger. That's on the black line here. So we are in between 200 days moving average and the 50 days moving average, which is a pretty much comfortable sign with respect to where the market is. And one thing what we have to observe is like India as a domestic market is pretty much resilient, stable, and there is not much of concern to be focused over here. The only concern at this point is from the global perspective. India is not an independent economy, we are a dependent economy, and whenever there is a variation in the global macros, we are going to face turbulent times or challenging times ahead. So we are having pressure from the FDIs, that is foreign direct investors, and also from the oil shock, and also the semiconductor supply, the AI run. All these stuffs are hampering the overall growth from Indian market perspective. But at this point, I would say domestically, we are in resilient phase. That is the reason sectors which are domestic dependent are pretty much faring well, and things which are dependent on the external sources or global macros are not performing that great. So let's move ahead with the leading sectors at this point. So coming to the leading sector part, let me start with India's manufacturing index. You can see the charts are pretty much good. The indices has shown resilience and the market is moving up with respect to manufacturing space. The setup is really good. We can observe the cup and handle space here, which is pretty much smoother. Starting from September 24 to February 26, and again one more cup handle which has formed up, and a breakout from here has not materialized clearly, but I'm anticipating a good run from here with respect to manufacturing space. Moving ahead with Nifty Healthcare, which has clearly broken out of its previous high, and this week we have observed the pullback. And this pullback is not just with respect to one particular space. It has happened over the entire market, barring the Nifty IT. Entire market has gone through this pressure. So as a result, this is not a major structural concern, I would say. At this point of time, it is just a matter of inflows and outflows of money. Because at this point, there are stocks which have been moved out of the index, and there are stocks which have been included in the index. We have to see how this performs over time. So coming to Nifty Mid Select, this is one space which I'm actively seeking, where I can see there is a good amount of run up and the pullback is pretty much nominal, not so downward facing. It is really strong. And coming to the point of small cap, micro cap, and mid small health, all these spaces are holding really well. We can expect good amount of run up in the coming days over here. That is one strong sign of the market with respect to Nifty Midcap, Small Cap, Health Space, Pharma Space, Manufacturing Sector. And moving ahead with Nifty Junior, which is something but the Nifty Next 50, this is also holding pretty well. Metal Space is doing good. Defense is pretty much doing well. And Energy Sec, this is also pretty much comfortable here. So this has been the theme so far in Indian markets, and it has not changed since from past, like let's say 3 to 6 months over time. Only surprising sectors which came up in between was small and mid cap. Though valuations are not cheap, the prices are telling a different story, and there is a good amount of stock level movement which is happening in this space. So whatever is happening at the index level is like 10-15% of movement, but within the stock space, it is the stocks have moved beyond 50 to 100%. I'm not going to discuss about the stocks. Frankly speaking, that would be considered as an advice, which I'm not going to do here. But for now, these are the leading spaces which you have to observe. Now moving ahead with lagging space, Nifty IT is still lagging a lot, though there is some kind of recovery which can be seen on the screen here. I would prefer to stay out of Nifty IT. Nifty Auto is some space where we can see a little bit of hope in the coming days, owing to the festival seasons which is going to start post August and September. Prior to that, the purchase of the bookings will happen, and also the companies which will anticipate the sales to pick up definitely will pick up the point saying that, okay, in the next quarter, things are going to be pretty well. So they have to ramp up the production. That is how the systems are going to move. At this point of time, I'm not so hopeful on Nifty Auto as well at this point, but I'll be anticipating or I'll be monitoring the numbers for next upcoming quarter here. Now, Nifty India Digital, it's the same story as Nifty IT. I'm not going to touch over here. Again, realty space, weaker at this point. Though it is above 50 days moving average, I'll wait until it breaks this particular trend line. And coming to Nifty, which is the broader market and the smaller segment of large cap, this is one of the weakest space at this point with respect to the broader market space. Why? First thing, it has breached the 50 days moving average pretty much smoothly in this particular week. Though it is above the previous lows, which was made in the month of March, we don't see much amount of money which is getting flowed into this particular segment. Valuations are getting cheaper. Doesn't mean that it is going to perform well. So this is going to clearly specify that the moment whatever happens in our market is going to be pretty much stock specific, not pretty much into the broader market bull run. So, and also thematic indices are also going to move up, as I mentioned in the previous part. So we need to observe the broader market, and out of that themes which are pretty much doing well, and within that stocks which are generating good amount of returns. This is how the investment from my perspective will be going for altogether in the coming days. And coming to the point of Nifty rebalancing or MSCI rebalancing, what we were speaking of. So what happens in the MSCI rebalancing? Let me give you a perspective here. MSCI stands for Morgan Stanley Capital International, which tracks the global world index and also the emerging market index. India, being part of the emerging market index, has not seen good amount of allocation in the past time. Like, let's say the allocation or the part of India within that index is around 16%, and that has reduced to 11% over time. So as a result, money will definitely flow out of that index, meaning the companies which were included part of those index will lose the investment. As a result, whatever is there within the broader market in India is going to lose money. That is, the companies which are listed within India and as part of that particular index is going to lose money. And we are speaking in terms of dollars here. As a result, whenever money will flow out of index, it will be in the huge amount in the terms of billions. As a result, the indices or the stocks which are included as part of this particular deal will lose money. And foreign investors will definitely, or the global investors who have invested, will have to raise money. As a result, the broader indices face the sell-off. This is the prime reason, and there is no concern with respect to the structure of Indian current market. So domestically, we are resilient. Macro level, we are not that great yet. Since India is a dependent economy, we should look towards the global macros improvising. And US-Iran war still stands as a blockade. Though US oil prices has reduced, the pricing has not reflected in the market movement yet, I believe. That is the prime reason we are not seeing the bull run yet. And in the coming to other parts, once the prices with respect to US oil has reduced, that reflection will take some time to reflect in the actual outcome of the stocks or the results from declared by the companies. It will take its own sweet time, maybe a quarter or two. Until that happens, we are going to see turbulent times. Hopefully we'll see a better days coming ahead. So thanks for watching the video. Stay tuned. Please share, like and subscribe. Thank you once again.